for our morning policy panel. The panel will focus on global coordination and on the best policy mix that both emerging and advanced countries can put in place to accelerate the transition towards carbon-neutral economies and societies. The panel will be animated by very distinguished guests who will share with us their experiences and views to better coordinate our climate action. Sri Mulyani Indrawati, Minister of Finance of Indonesia, Martin Guzman, Minister of Finance of Argentina, Agustin Carstens, General Manager of the Bank of International Settlements, Laura Cozzi, Chief Energy Modeler at the International Energy Agency, Odile Renaud-Bassot, President of the European Bank for Reconstruction and Development, Jean Likun, President of the Asian Infrastructure Investment Bank, Lind Berridge, Professor at the University of California. The panel will be moderated by Gillian Tett, journalist and chair of the editorial board at the Financial Times.
Well, thank you very much indeed. And it's a great honor to have been asked by the Banco d'Italia and the Finance Ministry to moderate this incredibly important panel. I often think that the role of financial columnists and academics at these types of events is to act a bit like the fool in a Shakespearean play. We're here to ask the idiot questions, to speak truth to power, and maybe to entertain you a bit. And in that respect, I think that the challenges that Professor Nordhaus laid out clearly are both very sobering and represent a strong call to arms. In fact, in some ways, speaking as the fool, I would say that for the G20, we're currently in a multi-act drama. Act 1 was after the great financial crisis, when the G20 did respond quite effectively to the challenges then. Act 2, in some ways, was during the COVID-19 pandemic, when the G20 has scrambled to try and create some coordinated policies with somewhat more mixed success. Act 3, in some ways, occurred just yesterday in the discussions about the coordinated corporate tax initiatives. Again, the full fruits of that have yet to be seen. And Act 4 is now looking at the climate challenges that in many ways are the hardest one of all. Because the good news is that it is clear that almost everybody on the international stage now recognizes the need to act to avert climate change. The other bit of good news is I think most people recognize, as Professor Nordhaus described so eloquently, that current policies are failing to avert global warming effectively. There's also widespread recognition that there needs to be significant shifts and discussion around things like carbon taxes. And I would imagine that, speaking as a fool again, one of the key aims of today is to try and get the G20 to rally behind carbon taxes in an effective way and behind mechanisms to ensure that more money flows to the groups of people who are going to suffer from carbon taxes and flows into the technology and the research needed to mitigate the impact of climate change. But the bad news is that it's still very unclear whether there is a consensus or not. It's very unclear how carbon taxes can be structured, if they can be structured, in a way that both avoids the cross-border conflict as a result of measures such as the EU one recently announced or going to be announced this week. It's unclear how to ensure that we get some level of domestic political support in America for that. It's unclear how to alleviate the very understandable concerns that emerging market countries have towards issues like this. And it's also unclear how to get money flowing on the scale needed to the emerging markets to actually have the investments that we need into renewable technologies and also to cope with vulnerable populations. Is there more of a role for multilateral development banks? Could groups like the World Bank play a more imaginative role with things like blended finance? What exactly are the private markets going to do in relation to this? These are all crucial questions which we're going to try and address in the next 90 minutes. So we have a very distinguished panel to talk to you about this, half of whom are here. The other half are going to be floating above your heads in cyberspace. But we're going to start with somebody who is here with us today, Augustin Carstens from the Bank for International Settlements. And I'd like to hear from you for about 5 minutes. In your view, what are the key levers and mechanisms that we need now to ensure that there is sufficiently rapid effort to mitigate and halt climate change?
Well, thank you very much, Gillian. Great being in a panel with you and with Martin Odile and Idrawati and everybody. And thank you very much, Ignacio, Daniel, for organizing this panel and devoting a day to this key topic. I mean, as you said, the challenge is enormous, and therefore we need to use every single good idea that is out there. It is impossible to think that we will be able to fill the gap or to really cover the ground that is needed, in particular that we are starting already late. I mean, a way, I think a way to conceptualize the huge challenge that we face is that we need to engineer a huge reallocation of resources across sectors, across times, across countries. Usually reallocation of resources is tremendously difficult, and it's very difficult to organize it in a very short period of time. I mean, just think about where we are today with COVID-19. The solution of COVID-19 requires huge reallocation of resources, and that has been compounded by technological change and globalization. We see many sectors suffering. So, I mean, I think first we need to realize that it will not be an easy task, and therefore we need to use carbon taxes, we need to use offsets, we need to use all the political instruments that are there, all the instruments that we have at the international level. I mean, for that you mentioned multilateral development banks, and yes, that's essential. Why? Because in the margin of reallocation resources across countries, that probably is one of the most effective ways. The other major issue for reallocating resources is markets. And one in particular that I'm the most familiar with is financial markets. I mean, a way to characterize financial markets is precisely the place where resources travel to time and they are reallocated. And in that way, I think that there is a huge task to make sustainable finance sustainable, and to just work towards the financial market, provide much better signals to reallocate. I think benchmarking at the corporate level will be very, very important. I think what we want is markets to make a differentiation in terms of performance, in terms of return. And for that, it's essential that we provide the infrastructure that is needed for that signaling mechanism to work. Today, I have to say, we don't have the signaling mechanism. We are working towards I would say, the infrastructure, the taxonomies, and so on and so forth. I think a key challenge that we will face into the future is that we're starting in a gradual way without much a mapping of the information requirements to the final goal of really making a dent on the climate issue. I mean, I see it a little bit as inflation targeting. That is a terrain that we central banks are familiar with. We have a clear goal, which is inflation targeting, and therefore you need to organize yourself so that you have incidence in that margin. Here, I don't see that transmission clearly. And I think we have to work towards that. So we need to work in all fields.
So thank you very much indeed. Before I came up to the panel, one of the participants begged me to avoid mush, to avoid too much ambiguous talking on this panel. So let me ask you specifically, as part of your call for more clarity, like we have with inflation targeting, would you support measures to introduce a carbon price at the BIS?
Yeah, I mean, I think carbon pricing is essential. I don't have a doubt that we need to do it. It has huge implications. It's not an easy market to organize because it's more than anything how to deal with externalities. And it gets very quickly into mixtures with traditional fiscal instruments like taxes and subsidies. And to organize that across nations is very, very difficult. But yes, there is no other way around it.
Right. Well, thank you. Well, I'm going to turn now to Minister Indrawati from Indonesia, who I hope is floating above my head somewhere in the ether. You can probably see her. Yes, fantastic. Because Indonesia is in a very interesting position. I mean, first of all, Minister, you're in an interesting position, having worked in the multilateral development bank institutions yourself, but you're now, of course, Minister of Indonesia, which is a country that is more than 50% dependent on coal for your energy needs, and yet you have courageously talked about introducing a carbon price in Indonesia, I believe, of about $5.2 a ton, higher than Singapore, which is quite remarkable. Unsurprisingly, has sparked quite a lot of domestic debate, to put it politely. So I'm very curious, from your perspective, what are the key levers or mechanisms that need to be adopted today to actually introduce the proper levels of transition required? And is there enough financing available for a country like yourself to actually do this? If not, what would you like to see from the multilateral development banks?
Well, thank you, Gillian. I think when we are talking about levers, we really have to look at, in one country, the ecosystem in place, whether you have a clarity in terms of plan and strategy to deal with this climate change, the national determined commitment, as well as how we are going to go to the net zero emission. And that really need a signaling from the government, whether there is a political commitment, there is a strategy, there is a plan, a program, policy in place. Now, for Indonesia, we know that the whole ecosystem is still in the process of building it. So one of it that you mentioned is the carbon price and carbon tax. We are still in the process of now legislating with the parliament to discuss about the carbon tax. And the carbon price, we have a government regulation that will be built. Now, the question about the carbon price as part of the market mechanism to deal with this carbon emission or the climate change challenge, that means that you really have to make sure there is a market mechanism that is credible and working within the country and across the country. And that is something that really needs to be done. If we are continue waiting, it's not going to come. Each country should have their own initiative. In this case, Indonesia is starting to build those mechanisms in place, the price as well as the market mechanism. We deal with what institution should be a regulator. There is an issue, as Agustin mentioned, about the data, as well as how we are going to track. And that is something which is really a lot of technical competency that need to be in place. So this is what the Indonesia trying to do in order for us to be able to increase or to lever, what you call it, public finance, which is in place to transform from the current path of the carbon emission development into a lower carbon or net zero emission. It will require a huge investment cost. You mentioned about the coal energy in this case. For Indonesia to change into renewable, that will require a lot of many instruments in place. First, the coal itself, the contract is very long, multi-years. So how you are going to deal with this, the independent power purchase contract? The second one is how you are going to convert into a renewable today. If the economy growing, then the demand for energy is going to grow, and that means the additional demand should be fulfilled with this more renewable, which is most of the time, for example, like geothermal, it will require a huge front-loading capital spending, as well as some risks that need to be addressed. And that's require quite a lot of policy on the fiscal side, whether this is in the form of guarantee, whether this is in the form of incentive for them to be able to explore. Then you also have to deal with the capacity for you to be able to transform this from non-renewable into renewable. Now, this kind of huge investment cost cannot be done by public funding only. Investment from the private sector is very critical. The question that you ask, how we are going to catalyze this investment from the private sector? The role of our own policy is very critical. Where we are going from here, what kind of signaling, what kind of incentive that you are going to provide. The second one, multilateral development bank can also do the same thing. They can help country to prepare a good, sound green project, in this case, that will allow this to then develop and create what you call it a credibility as well as reputation. For us also is also dealing with diversifying our instrument financing, green bond that we issue. Augustine mentioned earlier that today pricing is not differentiated. That is so true. We issue 3.5 billion green bonds since 2018. The yield is not reflected that you are actually appreciated by the market that this is actually for a green project. So if the market globally is going to work more properly, it should reflect this kind of differentiated price between what you call it, the regular ordinary bonds with the bonds which is dedicated for the green project or related to that. This is exactly what Augustine mentioned. Reallocation of resources toward a more what you call it climate change instrument is going to be very critical. And I think that can be done with the policy, political level, of course, commitment, policy, as well as a plan or program signaling from the government. But market will play a very important role. That's why Indonesia believes that carbon price and market mechanism for carbon should be there. Indonesia is still at the very early stage, so we are not claiming that it is going to be easy and successful. But I think we need to start. And we believe that this will complement the government-owned program and policy, and also all the incentive provided so that we are going to be able to transform from the current trajectory of the investment into a more climate change friendly investment trajectory. And that is really what we are trying to do at this very moment, Gillian. I hope that helped.
Well, thank you very much indeed. I just have a couple of questions before I move on to Professor Barrage. Firstly, Kristalina Georgieva from the IMF said that it would make sense to have a multi-tiered approach towards some type of carbon price, carbon tax, global regime. Is that something that you would also endorse? And do you see using SDRs or other forms of catalytic capital as one way to go forward with these significant investments that you need?
Well, one size fits all doesn't work. That's definitely true. But unfortunately, we are dealing with the climate change in which we are dealing with one equal same commodity, that is carbon, for the whole world. So ideally, it should be one price. But we also know that the world consists of many jurisdictions which is not yet that prepared or ready or able. So we really have, as a technocratic design, how you are going to make sure that many and more country is going to be on board, given the fact that they are not always ready, whether this is politically, whether this is competency, whether this is institutional setting. So we really have to be able to reflect that on this kind of commitment and not singling out, not in this is simply vying. The second one, I think the credibility is very important. You mentioned about the SDR, but also multilateral development bank. I think at the end, many emerging countries as well developing countries, they are asking, With this 100 billion which is committed in the Paris Agreement, they are not yet there. And then now we're talking about trillion of money. So the question is more like a credibility building on what is really can be delivered. And that will create more confidence where we are going from here, that this is path is going to be different. So more and more countries will be committed. And so I think on the SDR, this is IMF instrument, and that's why it is related to how the IMF is going to work with member country, whether this is going to be in the form of program or any other mechanism that is going to like help many emerging and developing countries. For the multilateral development bank, I think they have more diversified instrument, whether this is money, whether this is knowledge, as well as convening factors. And I think, given the need is huge in this climate change, and combined with post-COVID, in which fiscal space is going to be limited, challenge on the poverty reduction, which is still continue relevant at this very moment. So we really need to have a huge resource. The question is how you are going to mobilize resource and how this is going to be linked with the private sector, which actually have 100 trillion with a low interest rate at this very moment. So I think this is going to be the strategy that need to be done at the global level, but be very mindful that the world consists of so many diverse in terms of capacity and development of many countries that need to be accommodated for us to be able to have a global successful commitment and delivery.
And just, do you have any back of the envelope calculation for what Indonesia needs in terms of resources?
Well, we have from our own budget. If we look at because we also develop what you call it the budget tagging. With our own budget, we only provide around 32% what is needed for our own national determined contribution, which is already in place on this climate agreement in Paris. And that's definitely will not be adequate. We now, for example, establishing sovereign wealth fund. We also try to mobilize through the equity financing so that we are not going to be burdened by excessive debt. And at the same time, private sector is still at the very, very early stage on their participation. So this is really a critical time for Indonesia, for us to be able to not only fulfill the rest of the 70 or around 65%, which is need to be delivered in order for us to be able to deliver this national determined contribution, not to mention if we have more ambitious target of the zero emission, which should be come up earlier. And that's why we are going to require huge resources.
Well, thank you very much indeed, Minister Indrawati, and I think you illustrate very well from the perspective of one country the broader challenges. But I'd like to turn now to Professor Barrage, who's speaking to us from California at a very early hour, I believe, who's going to be talking to us from her perspective as an American academic about what levers are the most important and the role of carbon taxes in this respect.
Thank you, Kellyanne. So I'd like to highlight three core advantages that carbon pricing has over regulatory approaches to addressing climate change. The first is that carbon pricing can achieve emissions reductions at significantly lower costs than regulatory approaches. And different studies have found this to be true both with focus on specific sectors such as vehicle emissions and for the overall economy. So, for example, a recent consulting study in the United States compared two different ways of reducing emissions by 50% by 2035. One tool was a carbon tax of $40 per ton, rising at 5% per year. The other was a package of different regulations, including clean energy standards, mandates for carbon capture and storage, clean efficiency standards, etc. And the study found that by 2035, if emissions reductions were achieved with a carbon price, GDP was 1.5% higher. So this suggests that the potential cost savings from using a carbon price mechanism may be quite substantial. A second key advantage I'd like to note is the importance of the revenues that carbon pricing tools can raise. Such revenues can be used to address concerns about regressivity impacts on low-income households, on negative profit impacts on some of the most vulnerable industries, as well as general concerns about economic competitiveness. So recent modeling work out of Stanford University, for example, focusing again on the United States, has found that it takes only a fraction of revenues raised with carbon taxes to fully offset regressivity or negative impacts on low-income households. It also requires only a fraction of revenues to compensate to some extent the most vulnerable industries for profit losses. In addition, leftover or revenues more broadly raised by carbon taxes or other carbon pricing tools can be used to reduce other economically costly tax rates. And studies have found that this can potentially increase GDP or significantly decrease the cost of carbon pricing policies, even without taking environmental benefits into account. A third important advantage of carbon pricing I would like to note is, as Professor Nordhaus mentioned this morning, the fact that carbon pricing can be immensely helpful in providing incentives for clean energy research and development, provided that the carbon price signal is sufficiently strong and sufficiently broad. So it's empirically well established that higher fossil energy prices lead to increases in innovation in both energy efficiency and clean technologies. Now, unfortunately, this is another area where there's a large gap between policy aspirations and the current economic reality. As we have seen over the past 20 years, initially in the early mid 2000s, increases in green innovation, but since around the mid 2000s, we've seen in many advanced economies sharp declines in, for example, the fraction of patents that pertain to renewable electricity generation. In the United States, for example, the ratio of patents filed that pertain to renewable versus fossil fuel electricity generation has fallen from a high of 2 in the mid 2000s to less than 1 in 2016. So now fossil fuel electricity patenting again outweighs green patenting. This is reflective of the fact that currently incentives for green innovation are grossly insufficient. Again, a broad, sufficiently strong carbon price can help redress this, along with the need for explicit fiscal support for clean tech R&D. Both of these, as Professor Nordhaus mentioned this morning, are going to be essential in meeting the challenges that lie ahead.
Well, thank you very much indeed, Professor Barrage. You're speaking to us, obviously, as an independent American academic, but you obviously have had plenty of contact before with people around the current administration and have had an impact on the policy debate in America. So before I move on, I'd like to ask you two quick questions. Firstly, why has the administration of President Biden not endorsed or backed a carbon price or carbon tax policy yet, given that people like Secretary Yellen previously wrote papers with Mark Carney just last year, I believe, essentially pointing out the very beneficial impact of that. And secondly, is there anything that you think could actually change the domestic political considerations at the moment to bring the Republicans, other people who have hitherto been opposed to a carbon price or tax, on board within the American context? I think that's a question that many people around the world are wondering right now, particularly in Europe.
Thank you for this question. I certainly cannot speak for the Biden administration, but my understanding is that some of the concerns that currently exist around both carbon pricing and in recent debates about increasing gasoline taxes, for example, include both the political viability of carbon pricing or the lack thereof, and concerns about regressivity and impacts on poor, lower income households. So, and again, these concerns about regressivity can be addressed using revenues raised by carbon pricing instruments, but the political viability is a concern. Now, as far as Republican support for carbon pricing, there's heterogeneity within the Republican Party, and certainly some Republicans have joined in supporting proposals for carbon pricing, in particular if that is potentially introduced as a swap in lieu of combined regulatory approaches, which, again, there's economic cost savings to be had from using a carbon price instead of combined regulatory approaches. But it's beyond my expertise to speak about the political environment in the United States. But certainly this is a concern.
It's probably beyond the expertise of most people to make sense of the political environment at the moment in the United States. But certainly just an observation from in my role as being a fool in this great drama, it seems that if you start using the word rebate instead of tax for the climate change discussions in the American context, you may actually get further in actually trying to get some kind of bipartisan agreement there. But I'd like to bring in now Ms. Laura Cozy from the International Energy Agency to make some remarks. The IEA caused quite a stir recently by coming out and essentially stating for the first time the obvious, that there needed to be really quite dramatic changes in energy investments and policies to have any hope of hitting the Paris Climate Change Accord. You calculated you're going to need $5 trillion a year annually for the foreseeable future to basically support the transitions needed to hit the goals, which is an extraordinary amount of money. And you also said there could be no new oil and gas investment, which again is an astonishing thing for the IEA to have come out and said. I'm curious to hear from you what you think are the key levers, mechanisms to actually make this happen, and where that $5 trillion a year will be actually found from in terms of the money flows. And also, I'd love to know whether the IEA would explicitly support the use of a carbon price or carbon tax, like the BIS and IMF.
Thank you very much, Gillian. And indeed, a few months ago, on the 18th of May, we released a roadmap that was trying to put some clarity of what is needed from the energy sector to actually reach net zero emission by 2050, which is what is needed if we want to meet the Paris Agreement. And I think the key finding of our analysis is that the pathway to reach net zero by 2050 is narrow, but is still achievable. And this decade is really the decade of action. Why did we say and find that the pathway to net zero by 2050 is narrow but achievable? We looked at really what's needed sector by sector to cut emissions by a third, which is what is needed for the energy sector that accounts for 3/4 of emissions today. And the good news is that we do have all the technologies that are required to achieve the reduction cuts for this decade at our hands. First point. Second point, we know which policies work to push those technologies in the markets. What are we talking about to be more concrete? We are talking about pushing first and foremost the electricity sector to go to net zero. And today, globally, solar, wind, we heard from Indonesia, geothermal are the cheapest forms of producing electricity in the planet. This was not the case 5 years ago. Last year, 90% of new power generation installed in the planet was renewables. So we are getting there. We are getting towards the investments and the market to actually move those investments towards the greener alternative. This is for what concerns the electricity sector. Second, once we push decarbonization of the electricity sector, we have a very clean energy vector that can be used in many, many applications. For example, cars. If we look at what is happening in the automotive industry, it's astonishing. Over the past 2 years, basically all of the major car manufacturers have put forward electric vehicles as one of their car in the market. And the sales that we are tracking at the beginning of this year are over 10% in Europe, 6% globally, first quarter of this year, compared to just 1% couple of years ago. So we are really in the cusp of this technology revolution. And in some cases, what's happening is that this technology is already cheaper than the alternative. So first pillar, move very, very strongly on the decarbonization of the electricity sector. Second, electrify as much as possible. Third pillar is the energy efficiency. And I would push forward here energy efficiency in buildings in advanced economies. Again, we have the technology. We could use workers that are currently laid off to rebuild and make more efficient some of our building infrastructure. How much money do we need? You mentioned this, Gillian. Actually, the executive director mentioned this already at the Biden summit at the beginning of the year. We need to triple clean energy investment compared to today's level. So we have currently around 1.2 trillion going to clean energy investment. We will need to reach above 4 trillion by 2030. Clearly, this has to come from a variety of sources. We cannot expect just the public sector to cover for that. The private money needs to flow very, very strongly. But as I said earlier, we see pipelines of projects, especially in renewables, being ready to be deployed. It's about ensuring the cost of capital being low. And it's about governments, as Indonesia just rightly pointed out, to put the right energy policy in place. Now, third and important point for us is about just transitions. There are three elements here to be considered. First, the amount of money, the increase that we need to see in emerging markets is larger than what we need to see in advanced economies. So this has to be our front and center of attention. An analysis done together with the World Bank less than a month ago, we said that this could be the critical fault line in achieving our global climate goals. So we need to support emerging countries to make the necessary investment. In our view, the 100 billion that has been put forward by advanced economies has to be seen as the flow, but clearly we need to work in coordination to make sure that the cost of capital for this transition, for the green alternative, is lowered. Second point is jobs. We see potentially, analysis done together with the International Monetary Fund, a pipeline of new 30 million workers globally in the clean energy sector. This is huge. Big news for the energy sector, but what we are worried about is the 5 million potential job losses in two key sectors, mostly coal, and we are worried about those communities, those countries, those regions that are reliant on those revenues. And this is the attention of a global commission that we have instituted with Prime Minister of Denmark to make sure that we talk with the countries, with the communities, and we make sure that there are measures already in place now to ensure just transition there. Second element of the just transition, advanced economies need to lead the way. We need to get to net zero earlier than emerging economies to make forward a credible plan, put forward that is possible, and make the technology available earlier to then be transferred to emerging economies. The third point is about electricity access. We are talking about going to net zero emissions, but we shouldn't forget there are 850 million people currently today, as we are speaking, without access to electricity, meaning without access to digital, without access to knowledge. This has to be part, absolutely, of the COP agreement this year to ensure equitable and fair transitions.
Well, thank you very much indeed. I just have a couple of questions before we turn to the next panelist, which is, firstly, do you think that the advanced economies are willing to make the sacrifices or have the political will to go first in terms of bearing most of the burden initially of any transition, given what you've said about the need for the advanced economies to go first before the emerging markets? Do you think there is actually currently the will for that? Well, let me start with that.
I think in the discussions we are having at the IEA and bilateral discussions, we see a lot of momentum. The NDCs have been raised very significantly compared to what we have seen a couple of years ago. 70% of the global emissions currently have net zero targets. Basically, all of the advanced economies have put this target forward. I think that this is very significant ahead of COP. I think the next step has to be some financial signal. So I think that in terms of domestic action and raising ambition, most of the advanced economies over the past year have really put forward their cards and raised the ambition. This is certainly what we are seeing.
And what do you see as being the key block to stop the money flowing into that $4 trillion financing need at the moment? Because $4 trillion sounds like a lot, but it's actually tiny compared to the amount of money that's sitting around the world, somewhat idle in the capital markets. You know, in your view, what are the key blocks preventing that money moving into those investment needs?
So you are completely right, Gillian. The money is out there. And when we talk increasingly with investors, they actually tell us that the appetite for green investment is very, very high. So what we need to do is to make sure that there are bankable projects on the ground. I really would like to commend the Indonesian minister, making sure that the energy policy on the ground is stable, is certain, will just make the money flow automatically. The other second aspect, we have made this huge review of cost of capitals. We are living in an incredible period in advanced economies with the very, very low cost of capital today, which will push and accelerate certainly even further the clean energy transition. This is not the case in emerging economies. There has to be there really a concerted effort to make sure that the cost of capital for the green and cleaner energy technologies is brought down. We are going to live over the next decade a transition from a global economy where you shift actually from energy to capital. And we need to make sure that this capital cost is brought down to ensure that we see this shift. So I would say that the multilateral banks, we have heard a lot about carbon prices and carbon taxes, certainly very important, but let's don't go to have the perfect being enemy of the good. Focusing on lowering carbon, the capital cost is going to be really, really the key to unlock the private capital that we need to reach the trillions.
Well, thank you very much indeed. I'd like to turn now to Mr. Jin, the president of the Asian Infrastructure Investment Bank, which is currently in a very interesting structural position from my perspective, again, speaking as a journalistic fool. The AIIB, from its inception, has promoted clean energy and renewable energy, and as I understand it, has refrained from investing in any coal-fired operations at all. And yet, the founding country, which was behind the AIIB's creation, is China, which is obviously viewed by many people around the world as a key source of not just carbon emissions, but coal usage. So I'd love to hear from you, Mr. Jin, President Jin, what you see as being the key levers for change at the moment in terms of moving towards net zero. And to what degree do you think your work in actually promoting clean energy investment can lead to a wider shift in Chinese policy?
Thank you very much. I like to focus on a couple of points, based on your question. First is the mandate of the bank, and then the major shareholders, including China, who are backing the development and management of this institution, and how we try to converge our views with regard to the efforts to deal with climate change. First of all, as you know, the bank was up and running in January 2016, just a couple of months after the Paris Agreement. So we've been created against the background of the international support for climate change mitigation and adaptation. So this is very much embedded in our Paris Agreement, in our mandate. The bank's mandate is to promote the economic and social development of the member countries, and particularly the low-income countries, and through connectivity, through integration in a global economy. And in this regard, it is clearly mandated that we should do our very best to rise to the challenge of climate change. So from the very beginning, we focus very much on the infrastructure which should be built with an aim to improve environment and mitigate emissions. So this is very much clear, and we don't think it is right for us to do the infrastructure investment in the traditional way. We have to incorporate high-tech technology to use the energy efficiency technology to reduce emissions, and our efforts to promote renewables is very much important. Now, China and many European countries, as the major shareholders of the institution, are very much dedicated to support these efforts, and we are in full agreement in either in the internal management or the board. We should try our very best to do this. Now, you referred to the situations in China. As you know, the Chinese leader announced not long ago that China aims at the carbon peaking by 2030 and to achieve carbon neutrality by 2060. It's very much clearly announced, and I would say China would be able to do it. So we have the full backing of all of the shareholders, including China. Now, with regard to the developing countries, for instance, the major shareholders of this bank, China, India, Indonesia, and all these developing countries, first of all, they are countries of a large population. They are in the process of industrialization. They have not yet moved to the post-industrialization era. So dealing with emission is definitely a challenge for these economies. But you could feel comfortable that all of these countries are very much dedicated, as Minister Suri Muriani just said. All these countries are very, very much committed to climate change mitigation and adaptation. So let me stop here, and if you may have some other questions.
Yes, thank you very much indeed for that very interesting intervention. I'm curious, do you as a bank, as the AIIB, have a perspective on carbon price and carbon taxes? Would you join with the IMF in saying that this should be an essential part of any policy program going forward? And would you want a multi-tiered approach, as the IMF is currently calling for? And secondly, the question is, what role do you see for catalytic capital or for blended finance? And could you join forces with other multilateral development banks to try and take a joint approach in that respect?
First of all, as you know, we certainly welcome IMF's announcement about the carbon taxation and carbon pricing. But essentially, this is the responsibility of the sovereign governments with regard to this. And I think the multilateral development banks, IFIs, have the moral support, should have the moral support for this. Once there's the consensus on the international level, I think all of the IFIs and MDBs would be supportive, and in their financing, they would certainly follow. So we are looking forward to the development in this regard to see whether the governments, sovereign governments, developed countries can quickly reach consensus on how this is going to be done. Now, with regard to the financing for climate change and mitigation and adaptation, we are already working very closely with the other multilateral institutions. Give you some of the numbers. And in 2020, 8 MDBs, multilateral development banks, financed $66 billion for that purpose. And with co-financing, the total amount, the amount is $85 billion. So total, the financing from the multilateral development banks in 2020 is $151 billion. We have worked very closely with the World Bank, ADB, and also work with EBRD to co-finance for the purpose of dealing with the climate change. So international multilateral development banks are already working together in collaboration. And I'm sure that moving forward, we should do more, because one bank's power is limited, and total financing done by any institution is limited. Only by leveraging our resources and working with the private sector could it be possible for us to mobilize the maximum amount of financing and to address climate change.
Right, thank you. Just one other quick question before I turn to Ms. Odile René-Boisseau from the EBRD. I'm curious, when you look at the Belt and Road Initiative, which is obviously one part of the developing world, which has attracted a lot of attention, there have been a lot of plans for coal-fired power generation in the Belt and Road Initiative. Do you expect that to stop?
I'm not in the Chinese government anymore. I can certainly speak on behalf of the Chinese government. But as you know, in some of the international forums, likely in recent Boao conference in Hainan province, in some of the roundtable discussions, and which I participated, we also discussed this issue. As you know, we in AIB have made it very much clear we are not going to finance any coal-firing power plants or any project which are functionally related to coal. And indeed, ever since we were up and running, we never, ever financed any coal projects, and we won't do that. Now, with regard to the Belt Road programs, I think certainly it's the idea of the Chinese government and how to cooperate with the other members of the international community to finance global integration, regional integration through connectivity. And during the meetings, I also have heard that the Chinese are very clear about the importance of not to export coal technology and should do as much as possible to finance renewables. And I think this is certainly something we should be very much welcome. Thank you.
Well, thank you very much indeed. And it seems like a good moment to bring in Ms. Renaud Bassot from the EBRD, which of course has been also promoting clean energy transitions across the area that you are regions you're supporting. Can you give us your perspective about how you're trying to do that? What are the key levers or mechanisms to try and promote a green transition? And I'm also particularly curious, given that you are working within the European framework, which has taken a fairly hardline stance in the definition of what is or is not green. We've had the European Investment Bank, for example, refusing to invest even in gas. I'm curious how you define what is green transition from the EBRD perspective.
Thank you very much. And thank you for the Italian presidency for organizing this very interesting day on climate. So what we are doing as EBRD is, first of all, we are, as a development bank, providing financing, and we have very clear objectives in terms of financing the transition. Last year, we decided to be, we set the objective to have 50% of our investment in the green area, so to be majority green. And last week, we decided to move towards full Paris alignment by the end of 2022, which means that all our financing will be, all the projects should be consistent with the Paris Agreement. And this is an important step forward because it means it's for our direct financing, but everything also we do with financial institutions, through the banking system and so forth. So this is a bit of, we launch ourselves in this journey. I think it will be a long journey because there is a lot of methodological issues on which we've been working with all the MDBs to define what does it mean. And we'll have to refine, to learn by doing in a way. That's important for us also because we are intervening in countries, our countries of operation have a big issue with green transition. Overall, on average, their carbon intensity is 30% above world average. So it means that they have a huge task to green their energy mix and their policies. And the third point I wanted to make is we are a bank which has been set up to finance primarily the private sector. 75% of our financing should be in the private sector. So we are very much at the core, the core of what we should do to have private projects in these areas, and not only public infrastructure projects and so forth. To be, looking forward, I think to make progress in this and to be able to deliver, and listening to Professor Nordos, we see how big the challenge is and how little we have achieved so far. I think that we need to focus on 3 concrete steps. The first one is very much related to what Sri Mulani was saying this morning, which is the importance of having the right policies at the country levels and the right incentive, a clear regulatory framework, a clear strategy towards net zero emission and so forth. And this is a place where MDBs can have a very important role to play. Because it's difficult to do that in developed countries, but it's even more difficult. And you know, the know-how, the strategic skills, technicalities, and so forth are huge. And I think MDBs really have a huge task to provide some support, technical assistance for countries to develop this national determined contribution, long-term strategies, which are the key tools of the Paris Agreement, and which will be key if we want to be able to attract private financing. Because if there is no clarity about what is the long-term objective, how you will go about that, what will be the sectoral implication, there will be no investment. So I think that's a very important pillar, and what we are trying to do among the MDBs is to get ourselves a bit organized to cooperate on that, to avoid that we are all doing the same studies, and so really to get a sort of strong coordination mechanism to get this thing working. The second big challenge is to attract the private sector. I mean, MDBs can do a lot with their balance sheet, but it's not unlimited, and shareholders are, willing to maximize the impact and to get, we need to get the private sector. And one very important thing is to understand what the private sector investors for in emerging and developing countries need to get investment. We will hear this afternoon there is now a big money flying to developed economies in the green area. It's not already the case in the private sector, in the developing countries, emerging countries. And that's why I think we need really to work at the countries level with private sectors to understand what is needed to unlock investment. And this is something we can do with what is called country platform, having a really climate-focused discussion with the government, with MDBs, with the private sector on what is needed in terms of policy making, signaling, regulatory framework, how to, for example, what is the process for authorizing new investment. Sometimes it's very cumbersome, very long, and so forth. So what is needed concretely to unlock investment capacities and private sector money. And in that sense, MDBs can play a very important role in brokering these dialogues. And we are really committed to do that. The last point I wanted to make is the importance, and it goes a bit beyond our scope, but I think we can help moving in that direction with all the policy discussion we have with our countries of operation, is the need to move towards real and meaningful carbon prices. I think this is key. There are different ways to do it. Carbon tax is very simple, very efficient, and so forth. You can also have carbon market mechanism. But I think this is very important, and this needs to be embedded into the national determined contribution and LTS. We are having a lot of discussion with the countries in which we intervene. We saw before in the screen showed by Professor Nordos that Ukraine, for example, was at a very low price, quite large on the market emission system. We are trying to discuss and to work with the government so as to make the system working and efficient. As our colleague from International Energy Agency was saying, in that maybe the important thing is to start things moving, to put in place a system. Maybe the carbon price will be different, maybe the coverage will not be so large, but I think it's to get things started and to have the mechanism for monitor, reporting, verification, and then you can increase it. We saw that happening in Europe. I think we should not necessarily look for the perfect system at once, but at least start developing it, and then you can get it, with higher prices and so forth. So we are working very much to do that and supporting our countries of operation to deal with that. Of course, last point before concluding, just transition will be key. It's just transition between developed and developing economies. It's also in developing economies how to manage the changes and the shift in sectors and companies and people to adapt to the new framework.
Indeed, and thank you very much indeed, Ms. Renaud-Bassot. I'm curious, by the way, I should say that the organizers have told me that there will be a chance after the comments for people to make interventions or ask questions if they would like. So if they can signal that, I believe probably it's easiest with the microphone over there. Before we turn to Minister Guzman, I'd just like to quickly ask you, as I said earlier, the European Investment Bank has said no gas investment as part of being green. That's obviously applied to inside the European Union. For a group like the EBRD, do you think you need to take a more flexible approach, given that you're dealing with developing economies as well? I mean, are you financing gas infrastructure at the moment?
I realized I just forgot to mention that point you had in your first question. So indeed, we decided to stop every upstream investment in upstream gas and oil. So in fossil fuel upstream investment, this will not do it anymore. On midstream and downstream, we will have a slightly more pragmatic approach than the EIB, because we are intervening in countries and in areas where, for example, today 70% of the energy comes from coal. And in this, I mean, there may be a trade-off for these countries between the path of decarbonization and still relying on some fossil fuel activities. So we've had quite a tough discussion with our shareholders with very split views, and because we have our countries of operation, very dependent on coal for some, and very ambitious shareholders on the other hand, pushing for getting completely out of fossil fuels. And the approach taken is that we could still continue to make some mid and downstream investment in gas, mainly gas. Not coal is completely out, but gas. If it's part of a very clear and credible strategy towards net zero in a given date. And we would have to show that it has a very positive impact on carbon emission, and we will not have stranded assets, and there is a very clear and ambitious strategy in the countries in which we would invest so as to move towards net zero. And in a way, this is also a way to create incentive, because the discussion we have now with some countries is, okay, we could finance this project with gas, and for example, we had this, in district heating, that could be the case, but you need a very ambitious strategy and credible and so forth. So it's a way also to to bring the countries towards committing to these long-term plans. And so I think this is a balanced way. Things will become more and more difficult. I think it's a bit of a window of opportunity now to deal with that, but in a few years, I think we will be over it.
Well, thank you very much indeed. I'd like to now turn, last of all, to Minister Guzman from Argentina, which in many ways is a country that, a bit like Indonesia, epitomizes the challenge that we're talking about. I was chatting to the Minister of Finance from Mexico over dinner last night, who pointed out that 5% of the budgets of poor households in Mexico go towards gasoline. And if you suddenly jack up gasoline prices because of a carbon tax, it's going to hit the poor people very hard. I would imagine the equation is probably similar in Argentina, though I'm not sure exactly. But clearly, you have a large population of vulnerable people who would be hit by carbon tax increases. And clearly, as a country, given that you are in this process of negotiating with the IMF and others for debt rollovers and debt restructuring, you are not in a position to finance transition policies by yourself. So I'm curious, what for you do you need to go green as a country right now? Would SDRs help? Would concessionary finance help? Do you think it's reasonable to have a carbon price or carbon tax inside Argentina? And if not, how do you see Argentina actually moving on that path?
Thank you, and thank you, Ignacio and Daniele, for organizing this conference on climate. We know climate change is one of the defining aspects and problems of our time, probably one of the two largest problems that humanity faces today, the other being inequality. And they are related. They are both the consequences of how we have organized our economic systems. Gillian, your question is about asymmetries, and I'm going to focus on that when we think about how to address the issue of climate change. There are basically two tenets that Kristalina described clearly in her speech in the previous panel for addressing the issue. One is carbon prices complemented by regulatory measures, and the second is green investments. On both fronts, there are very important asymmetries among the nations of the world. On the front of carbon prices, yesterday we heard about how to deal with these asymmetries, the possibility that advanced economies go faster than developing economies. And that's certainly something that will be positive for the transition, but we will have to also take into account that there will be a learning curve when it comes to producing in clean manners. And if developing countries go slower, they will also learn slower. So this is a transition that they will have to go through anyways. So this will help, but we also have to have the elements for fostering the productive transformation that is required. So when it comes to the second tenet, the green investment, so understanding that green investment is a broad concept, we also face this issue of asymmetries. The financing conditions for developing economies and advanced economies are, of course, very different, both when it comes to public financing and private financing. And this is not just a development issue. This could also turn into balance of payments problems, because if we move ahead with carbon pricing and emerging economies, developing economies do not manage to adapt their structures of production, they will face balance of payment problems. So that's why we think this is also a matter for the IMF to look into. And going to the last point of your question, Gillian, the SDRs, what's been discussed over the last 2 days, the idea of building or creating a resilience and sustainability trust with part of the special drawing rights that are being issued, it's a very positive one, because this would help to some extent correct the financing asymmetries if this trust could be used for financing the measures that are required for the productive transformation. So let me finalize with what I started, the interrelation between inequality and climate. More advanced countries have more capacity to address climate actions, but it is possible to write rules of the global economy to improve both, understanding that there is a risk that we could go the other way. So it's very important that we work on this.
So just a couple of questions there. Firstly, to put it in a very direct way, if the IMF was to give you money in exchange for promising to go green or green faster, is that something that you would welcome? And secondly, I'd like to ask you for your views on the European Union's carbon border tax adjustment mechanism. Are you concerned that that is going to penalize developing countries?
On the second point, I may not comment now. We have to analyze the issue more. On the first point, well, certainly better financing conditions for, in our case, for the energy transformation, for exploiting the comparative advantage that Argentina has in wind energy in the south and solar energy in the north, will be certainly very helpful. And more generally, this is a broader discussion that we owe ourselves in the G20 community. There is a debt from the countries that have made the largest contribution to climate change to the other countries. And it turns out to be the case that there is a correlation between being a creditor country and an emitter of the negative externalities, and a debtor country and being damaged by those externalities. So there is much that we need to do in order to improve financing conditions, and also to discuss debt for nature swaps that will certainly help to advance these causes.
Thank you very much. We have, according to what my guidance from the organizers, about 25 minutes left. And I'd like to ask, before I ask if anyone in the floor would like to make an intervention or comment, whether either Mr. Carsons or Minister Sri Mulyani Rawati would like to comment, because I realize we've had a lot of comments floated after their initial interventions. I'm curious whether there's anything you wish to say in reaction to what you've heard.
Well, I thank you very much, Gillian. I just would like to make a comment, very general comment. And I think in all this process, especially of carbon pricing, carbon taxing, and so on. The social and distributive aspects are very, very important, and they need to be put at the forefront necessarily. Now, this shouldn't sound as something new. I think that whenever, I mean, I had the privilege of being Minister of Finance, and whenever you put taxes, you have to think about these issues. At the same time, when you're Minister of Finance, you know that sometimes the best fiscal or tax policy is the one that is possible. And oftentimes, the possible fiscal policy is not the optimal one. So that's why I say constantly that we need to depend on many different elements to tackle this situation. There are, I mean, for example, I think one of the areas where in the last 40, 50 years, the international community has made the most advance, other than, for example, the adoption of inflation targeting, is adoption of value-added taxes. And even though you can prove that the optimal value-added tax would tax medicines and food items, it's a generalized exception. So we need to start from the outset, incorporate those stumbling blocks, and work out how are we going to compensate one thing with the other. No, so I think this is an area where we need to work a lot, and where we need to be very imaginative to make the possible acceptable.
Well, thank you very much indeed. I'd just like to quickly ask Minister Sri Mulyani Indrawati whether you want to comment at all on what you've heard either from Argentina or the other speakers. And if not, we'll ask whether there are any interventions from the floor, or comments or questions.
Thank you. I think what just mentioned by Agustin is very important. Yesterday, when we discussed within the G20 finance minister and central bank governor, I think the discussion about resource allocation toward more green economy will definitely have a winner and loser. And so what Agustin mentioned about the easiest way is actually try to design a policy and program. The most difficult is actually to implement, because then you are going to deal with the winner and loser. First, I think for a country who has a strong social safety net, even with the strong social safety net, you are going to still face the middle class, which is going to hit relatively hard with this one, because they are not in a social safety net, but they are going to bear the burden today for the benefit of tomorrow. That's going to be the hardest politically, which need to be handled very carefully. The second one is actually in terms of the credibility of the measure that you are going to do, because this is going to change in terms of not only the signaling, but the decision of the investment. The technology definitely is going to help a lot. For example, as Laura mentioned about solar, geothermal, if the technology is going to reduce the cost significantly, then the trade-off is going to be less severe. And that will make the policy choice feasible. So in this case, the most important ingredient for all countries, especially for emerging, developing countries, to be able to participate in this climate change commitment is the access of finance and technology. Are they going to be credible? Are they going to be certain? That will be necessary condition, but not sufficient, because then you have to still dealing with the sufficient condition that is your own political constituent, which is also another very challenging task. So what I'm saying is that communication and education is very important. I'm in this case, even for me, we are using many channels of communication with social media, with cartoon, with video, with TikTok, with vlog, whatever you are using to try to say that climate change is real. So you try to reach even as the younger generation. The younger generation is actually the easiest. They are actually the one who's saying that they are care more. But then how to make this to become a political forces that allowing this change of the policy that will create winner or loser is going to be palatable. is going to be like politically acceptable, which is then the issue regarding compensation or how you are going to design the rights transition is going to be really required. And that is exactly what we really need to do. So Gillian, in this case, what I'm saying is that drafting a carbon price legislation is the easiest way. Drafting the policy is the easiest way, because you can easily just look, listen to all the experts, look at other country, then you actually can do and copy paste and then design it according to your own institutional setting in each country. But really understanding who's going to be winner and who's going to be the loser and how you really deal with them. And then make an opening the political opportunity to do that is going to be very critical. Yesterday, I think Bruno Le Maire mentioned about yellow vest in France. That's also a real political cost, social cost for implementing a certain climate change measure. So it's not only particular for advanced country, it's also becoming even more for developing and emerging country, which is usually the social safety net is not yet quite reliable and in place. Thank you.
Well, thank you. As someone who is in the communication business, I do think that the question of communication challenges are acute. I often think the path of the financial crisis changed when somebody invented the word shadow bank to capture at a stroke the concept of what was happening outside the banking system and why it mattered. And I think that sometimes the word stranded asset has the same communication impact in trying to clarify investors' mind, but no one has yet invented a word for carbon tax which doesn't terrify voters. And whoever can invent that word for carbon tax that doesn't terrify voters will not only have more chance of getting a bipartisan deal in America, but actually managing to craft policies that work across the emerging markets too. But we have an intervention from the floor now.
Thank you very much. Sylvie Goulard from the Banque de France. I want to thank Daniele and Ignazio for this fantastic discussion. Thanks also Professor Nordhaus to put in front of us the facts and figures. I don't know why we are more afraid by taxes than being cooked, as Kristalina said. Very briefly, nobody mentioned the central banks in the way they could play a role. The Eurosystem just decided this week to go green even in monetary policy. What would be, from your point of view, and it's a global panel, so it's to all the ministers, etc., what would be the most powerful tool? Should we go for monetary policy and supervision and macroprudential? How can we help? Thank you.
Augustin, would you like to comment on that as the only central banker's bank? You are the central banker's central bank.
Yes, thank you.
And you have the luxury of not having to answer to any voters or politicians, so you can tell us what you really think.
Thank you very much. I think that's a very relevant question. We at the BIS have been analyzing this in full detail. We came with a very interesting word, the green swan concept. It's not a tax, but I think it's a good concept that has catched on. I think, I mean, you know very well, we need to work on data. We need to work on taxonomies. We need to work on understanding how the financial vulnerabilities will materialize. We need to work how to map that into regulation. We need to work each country in its own dimension on how can make compatible, for example, what the ECB decided to green their purchases of assets. I think that's a good, certainly that's a very, very good policy. And in general, I think what central banks do is that usually they have a very high intellectual capacity. And I think that the human capital in the central banks could be used towards improve just our understanding of the problem and the capacities that the financial system have. So I mean, I think there are many issues that we need to do. We need, for example, for me, finalizing Basel III would be a good way to move forward, to prepare also for all of this. So I think there are many different angles in which we need to work. And for me, all of them are important. probably the ones who would have the most benefit is as I call to build infrastructure to work to allow the financial markets to work better towards this goal. There is where there is huge potential, and I think the return of our effort there would be immense.
Well, thank you. I'd like to ask whether Mr. Njin, President Njin, would like to come in at this point at all, because, of course, the PBOC, President Li Gang, has been at the forefront of central bankers who have been calling for changes. And I'm curious whether, working within the Asian financial system, you're seeing that the central banks in Asia do have a role in this respect as well.
Well, I think the central banks in Asia or elsewhere really have a great role to play in this regard, because the monetary policy can make a difference. I think, in my view, the ultimate solution for us to deal with the climate change is the technology. Because without new technology, it is not possible to provide renewables at affordable costs to so many people, particularly in low-income countries. And it's not possible for us to have a very smooth and quick transition to net zero. So the monetary policy have a role to play, just as the fiscal policy also has a role to play. And you asked me a question about Chinese policy, but to my knowledge, China is very much ambitious, because it's not simply a declaration. China has to fulfill its pledge. And given the track record of China, if China is really committed to doing something, I think China can make it. Likewise, many developing countries in Asia have the dual challenge of achieving recovery from the COVID-19 pandemic and continue to control the infection of COVID-19, and also to sustain their development, particularly to deal with the high level of debt for some of these countries. So they are faced with a dual challenge. And I think the challenge is very much different from many developed countries, European countries, OECD countries. As I said, they are in the process of industrialization, and they have a lot of manufacturing sectors. The products would benefit the rest of the world. Exports from many countries in Asia, as you know, to European countries, North America, are all very much important. So I think it's very much important for the central banks of all these countries to work together, and for the multilateral banks to work together. And I think it is very important for the international community to have reach consensus as soon as possible without any delay or squabbling among themselves. Thank you.
Something that everybody can agree on. We are almost out of time, and I'd quickly like to ask the other remaining panelists who have not called on if there's anything you want to react or comment on or react to in terms of what other people have said.
No, I think just one point on my side, which is the role of the central bank. I think it can be they can contribute very actively. The stress testing, analysis of the impact, the value of the asset with climate change and so forth is very important. And it's a signaling, very strong signaling effect also for private investors.
Right. Minister
And maybe
Guzman.
just one word on carbon adjustment mechanism. We will see what the EU will issue. What I can see is from working with countries which are in the neighborhood of the EU, and this is a very strong incentive to adjust their own domestic policies. You know, Ukraine, Turkey, they are really thinking about the impact, and you can see industrial companies in these countries calling on the government to act in order to avoid the negative impact. So I think this is also a way to create the dynamics.
Professor Barrage, do you want to add any more comments? And then I'll ask Minister Guzman whether you have anything else to add.
No, I don't have any comments to add. Thank you.
Well, thank you. Minister Guzman.
Thank you. And we're just out of time, so I will conclude by saying that by celebrating that this year we are observing a renewed multilateralism. This is very, very good news for the world. We are working on together on creating capacity for implementing the public policies that will be needed to address the biggest problems that humanity faces today. And thank you to you, Gillian, and all the panelists for the very enriching discussion.
Well, thank you. Well, I must say I found it a fascinating discussion. And if I had to sum it up, I'd say that there has been the good, the bad, and the ugly that we are currently collectively facing. The good news, the good part of the equation, is that there is now a seriousness of purpose and debate that was not around, never mind 10 years ago, even 5 years ago, around talking about these issues. I know that many people in the room have contributed to the mood changing and to putting these issues on the radar screen, and it's very, very striking how the tone has changed dramatically, even just in the last year. And the other bit of good news is that, speaking as somebody who is an observer, it does seem that people are coalescing around a number of key themes and policy planks which need to be part of any solution, such as the need for carbon pricing, which almost everybody on the panel has said needs to take place, such as the need for a lot of money to flow into renewables, such as a need for more transparency. And transparency, as a result of this simple device, the cell phone and the internet, is playing a really quite remarkable role in pushing change, such as the fact that the financial sector appears to be on board for trying to promote these changes as well. And we're going to hear more about that later on today. Certainly from the point of view of the Financial Times, I can tell you that there is an enormous story about how the financial and business world is changing, which is really quite remarkable, that I wouldn't have been predicted would have been so dominant just 3 or 4 years ago. So that's the good news. The bad news, though, is that, speaking as someone who trained as an anthropologist and is used to looking at systems of social groups, this seems to me to be one of the biggest and nastiest political economy challenges that the world has faced. Because you're not merely dealing with extraordinarily complex trade-offs inside countries, you're dealing with trade-offs between countries. And you're dealing with all manner of political tensions, both inside countries and across borders, which makes this extraordinarily difficult. What we're dealing with is a problem which cannot be solved by environmental science. It cannot be solved just by economic science or economists. Apologies to all of you in the room who are trained as economists. I'm sure that's most of you. It requires a lot of social science too, a lot of behavioral science. And bringing those three things together is going to be extraordinarily hard for all of you. And the ugly is that if we don't manage to do that, we are going to burn. We're facing a very grim future indeed, and we don't have a lot of time. The one bit of good news, though, is that if we ever needed anything that was going to act as a warm-up, a dress rehearsal for addressing these political economy challenges, it really is COVID-19, because it is a problem like climate change, which is cross-border. It's a problem which reminds us all that we are interlinked in a global chain of humanity, and if one link breaks, we all suffer. And it's a problem that illustrates very clearly, COVID-19, that you have to use a combination of hard sciences and soft sciences, that you have to think about political economies and incentives to try and get solutions. And I think that in many ways, that's a very good way to focus debate on the question of climate change and science. There is also, though, I'd say, an issue of language and communication. I would give a very big prize for anybody who dreams up a way of saying carbon tax without it sounding terrifying and making the political economy problems worse. I dare say the Banque de France would argue that taxes shouldn't be something we're scared of, but again, as someone who's a fool, I think that's something which is at the heart of so many of the political challenges today. So, as someone who is a journalist in the communications business, I'm delighted to be part of this conversation today, which is so important. I hope that we can continue to communicate it fairly and in a provocative way that forces policy change. And I commend all of you to contributing to this debate and wish you the best of luck in finding some path forward for the benefit of us all. Thank you.
Okay, thank you, Gillian. Many thanks to all our panelists for the insightful contributions and this very interesting discussion. I am now calling on the stage Ignazio Visco, Governor of Banca d'Italia, and Janet Yellen, Secretary of the Treasury of the United States. They will discuss together the path of global climate action over the past 20 years since the Kyoto Protocol was agreed 20 years ago.